You know, I got to tell you, this morning, right at 9:30, I thought this was the big one. You know, that long overdue session where the Bulls finally give up and those long-suffering Bears rejoice. Someone played handle, is it? Hey, at the low point of the session, the Dow was off more than 180 points. Then all of a sudden, it just stopped going down. Of course, the pressure came from the global bond market. A lot of turmoil there, and a lot of people can't explain it. So, the knee-jerk reaction, sell everything, ask questions later. But of course, there is a school of thought that says higher yields reflect a better economy. And then also there's this thing called common sense that says ultra low rates like negative rates are abnormal, and at some point they do rebound. So the market averted a disaster today, but let's face it, a lot of people still shaken up. For that reason, we've got 2 Bears, 2 Bulls, and 1 agnostic, all ready to square off. Hi, I'm Charles Payne, and you are watching Making Money. Let's meet our investment pros. It's been a while. We got him back, though. Dan Schaefer, Schaefer Asset Management. Nice to have you here.
Great to be here.
Paul Dietrich, Fairfax Global Market CEO and Chief Investment Officer. Paul, we missed you as well. Paul Schatz, 2 Pauls, Heritage Capital President. My man stayed over tonight. Steve Cortez, BGC Partner Trader and Senior Strategist. Think you get another title? Is that the most recent one?
Yeah, whatever title I can get, I'll take.
You got a lot of them. And, of course, our very own Fox Business, Lori Rothman. Thanks a lot, Lori.
But I'm happy to be here.
We got a lot of titles. You're the best-looking one on the panel.
I'll take that. That's a good one.
Let's take it to the first real deal. Now, listen, I think today's session underscores a tremendous amount of pent-up buying on the sidelines. This market was melting down. I mean, there's no doubt in my mind that we could have been off of 500 points a day. Why we weren't, maybe some of that money came in from the sidelines, but we also had the sobering reality that a lot of people have gotten comfortable with the bond market rally. That's beginning to fade. Dan, you know, you probably think that this is a preview, though, of uglier things right around the corner.
This was just a touch of what could really happen. I mean, we saw how fast it came in this morning, but it was a big gap. So the traders buy the gap, and they were able to hold it. So that's normal. But the way the market opened and came in this morning and the pressure that came in after that, you can clearly see that panic type of mode. Even though the other indicators were not pointing to it, the liquidation was occurring.
What indicators were missing, though? When we say other indicators?
Well, the VIX wasn't really moving up on that move.
The fear index wasn't moving.
The fear index, the S&P fear index. So we weren't getting that kind of a move. We weren't really getting a big volume spike per se on the way down. It was just the buy, and we've seen this before when the buyers just stepped to the side.
The buyers moved out the way.
That's really what happened. It was not a lot of forced selling, and of course, like you said, the bonds kind of precipitated the move coming in this morning.
Paul, we've been relatively sideways overall in a range for the whole year. And there have been many opportunities for sellers to sell, for the weekends to blink, and they haven't blinked yet. What's going on there?
Well, if you look at the economy, we basically have a stock market that's probably stretched a little bit and a bit overvalued.
Based on the domestic economy or just?
Based on the domestic economy. And secondly, we have earnings that have been outside of the oil and the global manufacturers really good. They're up about 9% if you take the others out. However, revenues are flat, and people are worried about that. And we know the Federal Reserve is going to be raising rates. We just don't know when. So we're kind of in a we're in an area that wouldn't surprise me if we stayed sideways. But I think in the long run, I think Q1 was an anomaly. I think we're going to be doing better for the rest of the year.
So do you think at some point we are going to make a major breakout to the upside? I mean, would you agree with that, Paul?
Absolutely. As long as I've been with you, I've been in the Super Bowl camp. I think Dow 20,000 is a layup. And I think the market, whether you look at it over the last 3 months, we've been going sideways, take a little longer view, 6 months with a slightly upward bias, the market's just pausing and waiting for the economy to catch up. I think
why Super Bowl, though? Why are you a Super Bowl?
So I'll say the flip side. The normal things in place to end a bull market, almost none of them are here. High-yield bonds are hanging in really nicely. Participation from the NYSE advanced decline line, just hit all-time highs. Sector leadership is still solid. You don't have the ingredients in place to end a bull market.
But Steve is short, though. Steve is short the market right now.
I am short the market and doing quite well so far on it, by the way. I think there's no layups in markets, by the way. I think you should always be concerned no matter how strong you think your view is. I'm bearish right now. But listen, I think, too, the United States market today, it was interesting. This was the most volatile, unchanged day I have ever seen.
Full of sound and fury.
This morning, and for folks at home who don't watch pre-markets, when we got up early, holy cow, was it I mean, it was a catastrophic session.
I mean, everyone
almost
would agree, though, if we were down 500 points a day, we wouldn't have, at 9:30, you wouldn't have been, it wouldn't have been, we would have expected it.
Well, and both stocks and bonds in the United States closed unchanged, basically, on the day-to-day. However, and this is what I caution most, and I'm sure the rest of the world, I like U.S. stocks on a relative basis, relative to the rest of the world. But China closed terribly, the DAX in Germany closed terribly, and German bonds, which that is really, the center of this storm is German bonds, and they did close well down.
And that brings us to the next real deal. Okay, we had a big deal today, too, that was somewhat overshadowed, but I want to talk about it because Verizon taking over AOL. For me, there are a few observations, right? AOL traded over the offer price. Even right now, they're being bought at 50. Why did it close at 50.52? Could there be a higher bid there? Be nice to see some sort of a bidding war going on. Now, rumors that Huffington Post is for sale might mean that this is not a content deal. So if it's not a content deal, what else could it be? And also, guys, remember in 2000, that Time Warner AOL deal, that was $183 billion. This deal, just a little bit more than $4 billion. So I think we got a lot of big deals. I think we're going to see a lot of consolidation. And for me, that's a bullish sign. What do you make of it all, Lori?
I do think it's a bullish sign, and I think you make an important comparison there. How times have changed. I mean, for what it's worth, we all thought AOL was gone with the .com bust, right? So when you, again, look at the valuation, it's certainly a lot lower. But the fact is, you've got to start seeing some consolidation in these telecom and media companies. I mean, I think looking at the whole spectrum, I mean, cable's got to do something, right? There was, this research, Moffett-Nathanson, the number of people subscribing to cable actually fell for the first time, down about 0.5%. I mean, that's like shocking. Streaming is a huge disruptor there.
Cable is certainly in trouble. Verizon, I think this is a drop in a bucket. I wouldn't be surprised to see them do more deals. So is it an ad tech deal? Is this OTT sort of thing, type of deal with Hulu, Netflix, or is it a content deal, Dan?
I think it's a vertical deal. I think that they've got cable, they got television, they got telephone, they've got all that set up.
That?
Now that Verizon
just joking, telephone.
When you call your grandmother on. Right?
Now they're going to the advertising side. I mean, the infrastructure at AOL it costs them less to buy AOL than to create it themselves on their platform. So as a Verizon, everybody just think of again as a telephone company, but with the cable, the internet. Now they could take that and now make revenue from the advertising side.
I want to ask you guys, what would be next? And any names floating around that you think could be the next to go in this sort of same kind of deal?
Charles, I don't know about specific names, but I think energy is really poised. And energy's done very well in recent weeks, but we're still massively off where we were, say, a year ago in the energy space, particularly the exploration names, the XOP kind of components. So I have to think that major energy companies, the strongest ones, the big integrated names like Exxon, Chevron, I have to think they're having a lot of meetings with investment bankers these days and looking at what they can attractively take over in the
And we saw
space.
a deal, Rosetta Resources, that a lot of people have written off, a pretty good premium for where it was. What do you like?
And on the energy, rumor has it there's roughly $100 billion currently being raised in private equity for energy takeovers and mergers.
You have a stock you like that? Maybe
I didn't do work on the energy side, but an old pick of mine was Famous Dave's. I'm going back to that
Dave,
one.
okay.
Famous Dave's, it's a barbecue place. It's been beaten down. It's a long-term turnaround story. They brought in the guy from McDonald's. I think you wake up one day and it's from 25 to 35.
You got any ideas of something? I know you think every company is going out of business.
No,
but that might be taking over.
Charles,
I'm teasing.
Fabulous companies in my portfolio.
Give me one that's going to be
mine
acquired.
and yours. Mine make money.
Give me one that's going to be acquired. Your companies make money, but my stocks make people money.
I'll tell you one I own and I own this, and I've been watching it before the AOL deal came out, and it popped up the last couple of days as Criterio. It's a French CRTO. It's a French company, but it's
I've seen it come across the tape a lot. Yeah.
Yeah, and it's moving.
Guys, don't go. You have it real quick. I just need a name and a symbol.
Actually, I don't know what's going to happen with cable and stuff like that, but I think the storage industry is undervalued, and I think there's going to be consolidation, and this is an area ripe for takeover because everything in technology requires.
I love all these deals. I think they're all going to happen.
I'm watching Yelp and Yahoo, just FYI.
Okay, good. Hey, by the way, progressives around the country, they continue to push their agenda, and they are taking on everyone, including President Obama. But the big question is, how much can they sway Hillary? We've got an all-star panel coming up. They're going to help us break it down. That's right. It is politics time because it is your money time. That's what it's all about, the future of our country and our economic schemes.